Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. All right, I think we're rolling. Hello, everyone. Welcome to episode 5? Yeah, 5. Yeah, of our ongoing mini-series, Informal Economics for Traders. Eric Mason, the informal economist himself, is back from his recent accounting exile. Last time we met, we were focusing on global economic trends and market responses. According to my notes, that included things like international public policy, although I wrote pubic for some reason.
More accurate.
Global currencies and interest rates. I'll link that in the show notes in case anybody else needs a refresher. With the rest of us who are ready to move forward, tonight's lesson is going to be a good one. Before we get to that, though, a reminder, if you have any questions, comments, or overdue homework assignments, feel free to send them our way, either by Discord, which you can join via links in the show notes, or you can email us at bandoftraderspodcast@gmail.com. Eric, you got anything you want to promote?
No, not really. There's a couple, certainly. Well, we have the king of all podcasts out about Quincy's recent blockchain issuance that Kyle put together for us.
Oh, I thought you did another one.
Oh, no, we've done a few. Okay. But the one that I went into detail was from, the always great host, Kyle. No, not really. It's, it's still time of year, but we're certainly, watch out for some Quincy debt issuances coming later on for some new schools and parking garages and all the fun stuff. But no, as of now, you can just Google us. We'll find stuff. The number one that's going to pop up is our recent interview with Kyle, which was on site and a blast. Which
that was so much fun.
One. Yeah, that was too much fun.
Actually, are you part of the Quincy blockchain? Can you mention that on here?
Oh yeah, sure. We can talk about that. So that's run by a nonprofit called Boston Blockchain Week. But I'll be one of the speakers up there during that week, and hopefully we'll have the band of traders well represented down there interviewing.
Any luck?
Yeah, right. Interviewing all the different people coming off the scenes. I'm trying to equate it to like Super Bowl week. We're gonna have Kyle hopefully harassing all the speakers, give them 15 minutes of tough questions.
Which reporter would I most like to be like? Probably Jon Stewart, I think, is the one I aim to aspire to.
Yeah. I can see you being an Anderson Cooper type too. I can see you getting really getting into the weeds.
Maybe. I tend to probably get easily distracted. I think we've learned from this series.
Prefer Stephen Colbert.
Yeah, more like that. Yeah. George Bush, great president or best ever? I'll just mark you down for best ever. One last note here, just in case France does come up tonight, I want to preemptively apologize directly to Retail Capital and any other French listeners right now and just save us all a little bit of time.
I'll try to behave myself.
What's on the plan for today? What do you got for us?
No, so I think this is kind of this is the one I was looking forward to most.
Me too.
Because it's a lot of what I talk about, a lot of the reason why I do what I do, which is how to not be fooled by misleading and dumb down economics in the news. The amount of just horrible economic theory that exists as you watch. I don't care if you watch news on the left, news on the right, news right down the middle. Mm-hmm. It's very rare to see good economics represented in reporting, and that's not a slight at all to reporters or anybody like that. It's just that economics can be very intuitive, but it also can be an counterintuitive field. And one of my favorite things, I think it's a goal of all economists, is that we need to be translators and we need to take these theories and these ideas and show people how to apply them. And I think in the context of trading, especially with all the great, way more competent trading guests you have on, Kyle, I think this can be fun. And I will say, as an avid listener, not just when I'm on, I'm not just that much of an egotist, but I do very much enjoy listening to all the other guests. Your guests do a great job of it. You do a good job of sticking to that line. But I think one of the things I'd like to do here is show some of the tools you use, to be honest with you, and some of the tools I use, so that we can suss out news and suss out, especially related to market movements, we can suss out issues in using good fundamental economics. So that's what I'm hoping to discuss today. I could go on a 40-minute rant about bricks. We don't know where it's going to go, Kyle. I apologize.
Well, I don't have any bricks questions in here. I stayed away this one. We did that last time.
Sad.
Do you think that part of the reason why it's so easy to misinterpret or misuse economics is because, like, the same reason like statistics, like it's mostly numbers based, right? And people warp and twist numbers to say whatever they want.
Yeah.
See, one example that sticks out in my mind is processed meats. Like the risk of cancer quadruples if you eat, bacon. But wait, you mean the risk goes from like 0.00001 to 0.00004? Like that's less scary than quadrupling, But they're the same thing.
One of my absolute favorite ones, Kyle, is 10% of people have a peanut allergy. 90% of people don't have a peanut allergy. People perceive those two data points differently.
Right. Yeah. One of them is negative. One of them is affirmative or positive, right?
Yeah. So it's definitely, one of the hard parts about it is that we need to stop and, think about the statistic when we hear it. And same thing applies to economic news. I when I was in grad school, I wrote a paper, and a line I put in the paper was, economics minus math is philosophy. And the teacher loved it so much she tweeted it out. She was like, she's from a student's paper, so I can't quote him. I'm sitting there on Twitter like, that's one of the smartest things I've ever said in my life. Feel free to try and give me credit for that. Right. She was one of my favorite teachers. She was awesome. But yeah, what's funny about that is I think that applies right here. See, I think sometimes, and I'm looking at your world, Kyle, and the world of your listeners, and the world of your guests that you have on. I'm looking at it as an outsider. Like we've talked about this before, that I'm not an active day trader. I think what you do is incredibly impressive, and I think it's a huge skill set. So a lot of like the ideas and stuff that I'm going to talk about today, I really want to say that I'm focused upon economics and the news. I'm not qualified to give you or your listeners, an overly detailed explanation of misinterpretation of data that they're using, because you guys are using data that's so specific to what you're doing. You're way beyond the general news.
We're mostly looking at the reaction that the news causes more than anything else. Yeah.
Bingo. Oh, you said that. Amazing. So like exactly what I'm here to do is like, I want to hand some tools off, or, maybe some solar eclipse goggles that are going to help you filter out some of the distortion on news that's coming out. And one of the things not to do a victory lap on, but Kyle, you and I were talking about it in the pre-show, was like, I gave a keynote speech at the end of last calendar year, on what would happen, what my, the outlook on the U.S. economy. And a lot of stuff I got right. People are now, I'm talking to people now who are like, oh my God, that's, you're some sort of soothsayer and all that. I'm sitting there going like, no, I'm not. I just looked at the data.
Yeah.
Like the data is just the data. And that's what I want to pass on here, because at the end of the day, the news is always going to dictate emotion. And, good quantitative traders like yourself and the people who listen to this aren't swayed by emotion. But everybody playing in the arena with you, there's a huge portion that is swayed by the emotional output of the news. And it's important to understand that the news is not a positive or negative entity. It is just an entity. And it can be biased. It can be optimistic. It can be pessimistic. But at the end of the day, how we're able to filter that is going to be is going to help us make clearer, data-driven decisions. And economics can be incredibly powerful at doing that.
Like a lot of times those moves happen so quickly that unless you have an AI bot that's like scraping the news release to see like keywords that, it's looking for to trigger a position, that you can't just act quick enough. You can't process it fast enough that stuff hits, market's gone. Trying to think of what would be like being able to look at a headline and try to see what they're trying to what feeling they're trying to evoke from the reader, I think might be something that be worth paying attention to. And that kind of sounds like maybe the direction you're kind of leaning towards here.
Yeah, Cal, you're right on, buddy. So here's a quick personal story. When the pandemic started,
Mm-hmm.
I started writing every day. I was taking apart all the data and I was doing like a Facebook and LinkedIn post, like little charts showing the data of what was happening. And part of the reason I did it was because I was listening to the news in the morning, and I would hear journalists or people with broadcast backgrounds reporting on this data.
Mm-hmm.
And I thought that was so strange because they would say terminology awkwardly and they would say incorrect terms. And I never faulted the reporter because that's not their background.
Right.
The most qualified person during the pandemic to talk about predictive analytics was a meteorologist. They actually use very similar mathematics. So I started posting it. I got like a lot of, social media impressions, whatever those are worth, from it. And a lot of the feedback was the same. It's like, wow, you're just taking apart the data and it makes me feel better.
Mm-hmm.
And I always thought that was really strange. It makes me feel better with something that was commented a lot, that was privately messaged to me and all that stuff. And I couldn't really understand that, to be honest with you, because I wasn't trying to make anybody feel better.
Right.
I was just trying to, I wasn't trying to report the numbers. I was just trying to accurately contextualize the number. And that's why I think you're 100% right saying like, that's what I want to talk about is how do we accurately contextualize data? And I think one of the best ways to do this right now is to use a global event that may or may not be priced into the market, depending on what type of investor you are.
Mm-hmm.
And that's what's going on with Millie down in Argentina, what's going
Okay.
on with their inflationary issues. So one of the funniest things I heard in my life is I'm listening to, obviously follow, I like South American, Latin American, Central American politics. I find them fascinating. I think they're, when I look at what's going to dictate the second half of the 21st century, I think India and Latin America is certainly going to dictate it quite aggressively.
I think anybody with access to the Atlantic and Pacific Ocean is going to have a leg up on everybody else.
Right. And you're talking about like lower moderate income nations that could get huge returns in capital. Like, those you kind of 100% right there, buddy. And as I'm watching those election results coming in, what is it, 6 months ago, whatever, somebody called Millie a fascist, and I was like,
we do that a lot.
Yeah, and the panelist, the reporter hosting the panel was just like, oh, okay. And she's like shaking her head like, yeah. And I'm like, he's a libertarian. Whether you like his politics or not, he's getting rid of government. You can't, that's like not how that works. Like
that's not fascism.
Yeah, it's like just because you don't like it, you can't call it like it's not like everything I hate is fascism. Like, and listen, the other side calls everything socialism and communism. Like, but I'm sitting there being like, he's trying to strip away government. You can't be like that's insane to me. So he gets into office, and within 3 months, everybody's flipping out because they're experiencing a massive, not massive, but a very pronounced and short order technical recession.
Mm-hmm.
And I'm looking at this. And the reason they have a technical recession is because they use two different rates for the currency exchange. They use the official exchange rate, and they use what's called the blue rate, which is the market exchange rate. They're nowhere close to each other. And that's basically a way for Argentina to take its foreign reserves and pump them into their economy by overvaluing the peso. People think of it this way: if you're overvaluing the peso, you buy the market rate. That's say half the exchange rate. So 100 US dollars gets 1,000 pesos, right? Let's say that's the rate.
Mm-hmm.
But then it's 500 pesos to $100 if you go to a bank. So you continue to do that cycle, and if you're going to do that cycle, you're basically the federal government of Argentina is basically subsidizing the Argentine dollar to make it stronger.
Is that why they got inflation going crazy too?
Bingo. So Argentina for a long time was one of the wealthiest countries on earth. It was back in the 1800s. It was literally, I think, the wealthiest country on earth for a couple decades, more than a few decades. And what happens? You have this runaway inflation, and runaway inflation is driven in Argentina by seigniorage, which is the government printing money to pay its bills. Though in the U.S., we don't. You've heard me say that 100 times. In the U.S., we don't do that. We have a debt ceiling. Otherwise, you could just print money.
Mm-hmm.
So one of the interesting aspects I've seen coming out of this like weird news is that they had this technical recession as if that was going to be a surprise. Like people were like, oh, And no politician in the last 50 years has telegraphed exactly what they were going to do before they got elected. He's like, I'm going to cut government expenditures. I'm going to close all these secretaries. And all right. And the people are like, oh my God, they entered a recession. It's like, well, no, government expenditures, consumption, investment, not exports. That's what makes up your GDP. Like, he cut one of those four things. So, of course, you went into a recession.
Right.
And now investment's coming back around. He's still chasing he's trying to create one unified market exchange rate. He'll do it eventually, but it was supposed to be like he devalued the Argentinian dollar. He devalued it. But that caused the market rate to also devalue itself. So now they're devaluing it at 2% a month. And as you can see, this gets more and more complicated.
Right.
But if you read the news reporting on this, they act like this is like the easiest thing to understand.
Well, I just pulled up like just a quick blip to see like the headlines in Argentina, and most of it looks pretty negative, I would say.
Yeah.
What you just said kind of sounds maybe not so negative.
No, and the thing is that it's like a bone healing. There's going to be scar tissue.
What's the purpose of that spin then? Like, is there something to glean from that? Or is it just that it's probably the better headline, and therefore that's going to be the angle they want to take on that?
Yeah, it's a better headline. There's also the idea that like he's a libertarian, which is inherently, heterodoxy.
Fascist, like, as we just learned.
Yeah, right. The guy who wants no government is apparently also wants a lot of government. It's heterodoxy. It goes against the grain, And I think anything that inherently resists the course of action, especially of the two major political philosophies, it galvanizes people on both sides of the aisle to attack that position. Because what if he's right? Like, that threatens all public policy.
Right.
And what's happening is that there's only one thing that grows your economy. Solar growth model won a Nobel Prize by Dr. Robert Sola, is investment. And he's driving investment. And you need two things for investment. You need free capital markets, and you need stable government. And a government that's constantly running deficits and running up massive bills has to be bailed out by the World Bank. The IMF, as Kyle's favorite agency is.
They don't exist.
That threatens the status quo, because those are what you need. I mean, the U.S. economy is strong, not just because of great labor pool, not just because of immigration, not just because of a strong dollar, not because of a stable central bank, believe it or not because of a stable political environment. Look at the rest of the world. We don't have snap elections. It's because of all those things. It's that complementary union of stability. Everything hates change. Momentum hates change. And what we're seeing in Argentina is that you had the status quo for 60, 70 years, and now somebody wants to change it. And everybody feels uncertain. People much rather continue with the bad policy than go through the shock of switching to a good policy.
Oh, God, do you ever work for a place that uses like really outdated software?
I work in government, Kyle. That's all we use.
Have you ever gone through one of the upgrade processes of those things? It is not fun.
Yeah, we switched to the cloud for our ERP, and it was so funny. Everybody was so nervous about doing it. All these people who had been working on the same system for all these years. And our IT team is amazing. Like, those guys.
Yeah, your IT team is awesome.
Oh yeah, you dealt with them, dude. They like, it's wild because I hear people in other governments be like, "Yeah, IT is horrible." And I'm like, dude, the IT team for us is sick.
You just gotta be nice to them, man. Treat them like, yeah.
Right.
Treat people nicely and they treat you well.
Dude, they're awesome. So like, but yeah, I mean, we went through that switch, and it's funny. Everybody's like, "Oh, this is a really good system now." I'm like, of course. I always tell my team, because I'm big on adopting new technology. I'm like, first day of using new software is the shittiest day.
Yeah.
Today's your shittiest day. Every keystroke gets easier from today.
Yep. That's a good way of looking at it.
In terms of condensing down why this is important, I know for a lot of traders, what does Argentina matter? And to me, it's a microcosm of different data news coming out. But how do you trade on Argentina? I mean, there are some people who do trade different forward positions on international non-investment grade bonds, which, God love you, I'd rather just go to casino. Kyle, you know this. There's people who make a lot of money who like know this stuff.
Oh God, I know. That's not me.
Not me. Equities all day long, man. Those people, like those are actually the smartest people in the world, and they just don't want to deal with other people, so they make a ton of money doing that and just never probably leave their
I
mansions.
just want to know what software they're using to,
Right,
you
like
know,
it's too much data not to be using some crazy software.
right. Anyway, Argentina and why it's important.
So why it's important is that is the cleanest microcosm that any one of the listeners to this show right now can go research, just like you did. It takes 15 seconds, because I want to give an example of something that's easily provable of what I'm talking about, because I'm about to give a very deep example. I'm about to give a very applicable example that gets a lot more complicated, and that's with Apple. So currently, the Department of Justice is suing Apple for monopolistic behavior.
Okay.
And if you read through, and hopefully your listeners have better things to do than me, and go dive into the details of that lawsuit, it's a perplexing lawsuit. And this is actually, I got to tell you, this is not pro Apple anti DOJ or pro DOJ anti Apple. This is more, it is very strange how things get reported.
Yeah.
All right. Because that's massive news. Think of it. If you have Apple stock, or you have a position in Apple, or if you have a forward or whatever, you would be hesitant at this news. But if you read through the DOJ's reading on it, what's very interesting to me is that they're not actually, attacking stuff for the things that we mostly associate with Apple. Like, for example, in Apple, if you want to have a subscription button inside your app in Apple, you need to pay like a 20-ish% commission. Polymatters, which is a great YouTube channel if anybody ever wants to follow it, they did a recent video on this too. There's been a few YouTube channels that have done it, and I didn't even pick up on this, but Polymatters picked it up, which is that Spotify, which has no profit margin, for Spotify. Like, God love those guys. They're trying to figure it out,
right.
But that's a difficult industry.
Spend it all on Joe Rogan's what happened.
Yeah, right. Like, honestly, apparently Spotify disclosed that Apple wanted to charge them 27% royalty for any subscription signed up inside the app. So if you have an iPhone and you have Spotify, you literally can't find a place to subscribe.
Wow.
That feels like you're using your market share to manipulate other businesses.
Yeah.
Like, the DOJ mentions that like a small brief. But what's very funny is that the big argument is super apps. So basically, like the WeChats of the world, like kind of like a WhatsApp, honestly, like what Meta turned into.
Yeah.
Like, it doesn't matter if you have an iPhone or if you have a Samsung, you can have like this one app that oversees everything. And that's like what happens in China, but like China's a bad model because it's kind of like the Chinese government chose the app and then people used it.
Yep.
But like that's the crux of this DOJ argument. That makes up like the majority of their brief. There's some other stuff about like cross integration, which is more, that's a different story.
But the bottom line is, it doesn't sound like this is the kind of case that's going to split Apple off into like 15 different companies.
I could not see that happening, and it sounds threatening, a DOJ argument, because you hear antitrust laws, and the current FTC chair, she's awesome. I think she's great. Trump likes her. Biden likes her. I'm sure Harris likes her, so she's likely to stay in. And she's a big antitrust person. Very pro-business, but antitrust.
Yeah.
So you could be sitting there as an Apple investor, be like, oh my God, this company makes up 65% of the market share. Oh my God, what's going to happen? In reality, the argument the DOJ is trying to make on here probably isn't where we would think as educated investors. Kyle, you and your show being much more educated than me, but like as active investors, we think of all the flaws we know Apple has: planned obsolescence, lack of integration, high royalties, consolidation of App Store, iOS limitations, stuff like that. That's not in there.
Software updates draining your battery before new models drop.
Exactly. Like, that's not in there. And the news is reporting this big conglomerate. Oh my God. It's like they're framing this, and I've seen it framed as an antitrust suit, and it's just not. And so if I'm an investor, if I'm a speculative investor, I'm like, how much of is that fake to the market? How much is the dude who has Apple in their portfolio suddenly freaking out and liquidating it and suppressing its price because they think it's an antitrust case?
Well, this actually makes me think of the Boeing story you talked about in the very beginning of this series. We were talking about the 737 MAX and like the issues that it was having in the overseas markets and why that wasn't really applicable here in the U.S. Like,
Yeah, I mean, it is.
Sorry. there was no real thought there, just that there was some real opportunity there if you were able to see through that bullshit.
Yeah, and Kyle, first off, there's always thoughts in your speech. Come on, don't lie to me. No, and what's funny is how much the market has changed right now. So, like, C919, which is a regional jet that China put out there.
Mm-hmm.
Like, I don't know if your groups of people follow that. I'm sure you have aviation guys in here because, dude, if you know this better than I do, if you know your way around the aviation world, you can play patty cake with those options like nobody's business. It's such a jagged revenue chart that, like, dude, the people who know that stuff, they're excellent. But, like, something that's not getting reported right now is like the C919 that China had. It's like they couldn't get the weight down, and so they really reduced its range. And that reduction of range means affects your ETOPS rating, how far you can fly away from a diversionary airport, which is going to make it pretty much unusable in a lot of markets.
Right.
Like this, I want to be very clear. I don't think, as an aviation nerd, like, I don't think the C919 is a failure by any standpoint. It looks to be a very good mid-market plane. The problem is, like, Western consumers is that, like, we want the A320s, we want the 737s, we want, like, that may find success in African markets, may find success in, like, some sanctioned Middle Eastern nations.
India, maybe.
Yeah, dude, right? But not the markets that can support the development of a mid-range narrow-body aircraft,
right?
Like, to justify the cost. So yeah, it's stuff like that. So, like, this big existential threat, which was the C919, never materialized for Boeing. Like, dude, I hate to say it, but they are one of the, and I'll full disclosure, I invest in Boeing. They dodge a lot of stuff. A lot of market competitors who you think could knock them out just never materialize because the aviation industry is just so expensive to get into.
Can we mention the whistleblowers?
I don't want to.
Okay, we can skip over that.
Oh no, and I'm talking about, like, other companies pulling stuff off, like the Embraer, the E2. Like, dude, Embraer's a good firm. Boeing was going to buy Embraer, and then that deal got quashed.
Yeah.
Dude, Embraer's an amazing company. The ERJ series is fantastic. It's just, and, like, after Mitchell Douglas,
McDowell Douglas,
MD,
yeah,
McDonnell Douglas. Thank you.
Yeah,
the MD-80 and MD-88. Those regional jets. After those kind of, like, after Boeing bought them and they turned it to the 717 and didn't get redone. But, like, look what happened to E2. You got to stay under 70,000 pounds if you want to be like one of these regional jets. The you call it FAA's clear, man. You got to be under 70,000 pounds. They went over. They got some of the most efficient engines that regional jets have ever flown with, and they went over the 70,000 mark. So I know nobody wants to buy them. And at the same time, you got Airbus buys Bombardier. They were called the Canadian regional jet. But now it's the A220, and it's like, dude, you can fly an A220 efficiently from Boston to New York City. I took one down to, I took one back up from NYC up to Boston after speaking at CFO Brew. And it's like, but that same plane could refuel in Boston and fly over to London. It's not efficient.
Right,
like,
right.
You lost the market. You're not going to hear that type of reporting. A lot of the reporting you hear in the aviation industry is the whistleblower stuff, is the Boeing stuff, and they should be reporting on stuff like that. That's that's news. I'm not, again, like this. I don't want this to ever come off as like I'm disparaging reporting. I'm just saying I don't think the reporting that's done in the news is really tradable.
Yeah, well, the news is about getting clicks and views and headlines and getting your attention, whereas the actual information that you want, like, that's maybe not necessarily going to be what gets the best headline, so it's not going to be what the focal point of the story is.
Yeah, exactly. Like, the goal of the news is not to give you investment information.
No, it's to get you clicking and hopefully checking out the advertisers on the page.
Right? Economics is such a unique tool that allows us to investigate this. And so to give listeners some of these explicit tools, what we do, because I can talk about Argentina and airplanes all night long. Like I'm on like hey, Kyle, you know this. I could go rent for that. You know, you throw in bricks and I'd be here for 6.5 days, and poor Laura would have to drag you out of the meeting, and I'd be talking to myself. I wouldn't even need somebody else there. I would turn up my mic so I can hear my own voice.
Right.
It'd be like really cathartic.
I'll turn the echo cancellation off for you.
Yeah. Yeah, no, I've totally never done that before, Kyle.
Right.
That's not. And I think there's really three major tools that we can use, three major tools in economics that traders can use.
Mm-hmm.
One is lining up incentives.
Okay.
All right? One of the best ways to discern people, the goals of a firm or the goals of a news story or just anybody's goals is to look where the incentives are.
Yeah.
If your investment strategy lines up with the same incentives of your underlying investment, that can remove the static of the news. You should always question if somebody says something's doing something. We obviously can't be inside people's heads. We don't see the stuff firsthand. We're getting reports on it. You can't fake incentives, just like you can't fake physics.
Mm-hmm.
People have a goal. The second is there's truth in data. Many of the guys I see on the Discord channel, maybe tons, you yourself, Kyle, many other people that we've been on the show with, we've been on panels with, Bear Banks, all those guys, they rely on data because data doesn't have a narrative.
Mm-hmm.
That's the beauty of data. So you may see something sensationalized in the news, and that's how it should be, to be honest. Should be, but that's how it is. Don't let that manipulate your data. Your data is where the information is coming from. And it's important to understand that the traders you're trading against are using the data.
Yeah.
Right.
Yeah.
So they want you to get emotional. And the third is one that isn't some grandiose, data analytical thing, isn't some bigger philosophy. But the last one is clarity. And it's very funny. I was on a speaking at a conference, and I got asked this during the Q&A section because I bring up that idea, in my day-to-day role as a CFO, is clarity. And somebody said, what do you mean by that? And I say, I get it from economics when I say clarity. And to me, clarity is when you drown out all the static, you drown out all the noise, and look at the real variables. And it's something that my mentor in economics, the first economist I published with, said something to me that I love. Real variables affect real things. Don't get caught up. You can have a model that has 80 different inputs, but at the end of the day, if only one of those is statistically significant, you concentrate on that.
Mm-hmm.
In order to have clarity, you must first have static. You must first see that there's a mess before you can see clearly through something. It's like you can't, the expression is like, you clean a dirty window is the expression sometimes gets thrown out in macroeconomics. And that's what I'm talking about, is that when you are hearing this news, when you are, seeing something that you go, this could affect my portfolio based on just people's emotions, is that as painful as it sounds, sometimes it's ignoring that and trying to seek clarity. Because a lot of times what you see in, sensationalized news reporting is a lot of static on one side and a lot of static on the other side. And what you notice is that there's actually very little connections between the two.
Mm-hmm.
And so what you have to search for is that where is that connection between cause and event? It's funny. You can read the news and you can read stuff where it's a drought causes it. No, it's high prices that's causing it. No, it's
too much
political
rain.
Instability. Exactly. There's too much rain.
The eggs are good for you. Eggs are not good for you. Yeah.
No, exactly. Chocolate's good for you. Chocolate's not good for you. And it's like, one of my favorite studies of all time, and I say this as a type 1 diabetic, is somebody went to a store and interviewed people who were buying Diet Pepsi.
Mm-hmm.
And they were like, do you have type 1? Do you have diabetes? And they're like, yeah, I do. And so the person was like, at the end of the report said, so Diet Pepsi causes diabetes.
Yeah.
And it's like, well,
that's what I heard.
Yeah. And you're like, okay, I'm sure you can. Let me just take your model real quick. I'm just going to do this and just switch the independent variables.
Right.
And we're just going to rerun that model. We're going to hit Control Enter.
Maybe people who are diabetic drink Diet Pepsi because they can't have sugar.
Right. That happens in news. And one of the big ones I think of when I hear about this is oil prices going up, gasoline prices going up in the U.S.
Oh, instability in the Middle East. Everyone tries to buy oil and they all get destroyed.
Yeah, because guess what? We export more oil than we import. It's in there. I'm sitting there reading this thing, and I God love them. I'm listening to a news report, and I'm listening to it, and then a few weeks later, I'm reading it, and all I'm hearing about is Russian imports are gonna spike oil prices, and I'm looking at them like, where is this happening? And they're like, oh, well, all the sanctions, and in the U.S., I'm like, the U.S. doesn't import Russia. I mean, we import a minuscule amount of it, like 70. At one place I read only said 70,000 barrels a day, and so it's like that's literally not even a rounding error.
Mm-hmm.
But oil demand's fungible, so like countries like India and China that don't have sanctions on Russia just import that oil, and then they're not demanding oil in their economies. I'm like, it's there's just no supply shift or demand shift. It's not like, dude, I'll tell you right now, the issue with gas prices, natural gas prices in Europe was not from there being a lack of natural gas. It was there being a lack of infrastructure to deliver natural gas.
Yeah, it all goes through one spot in Germany, right?
Yeah. And then Germany was like, we don't have any gasification facilities, so they couldn't even import LNG. Well, little Lithuania, which has the population of freaking Easton, Massachusetts, has something called the SS Independence, which is just a floating gasification. I'm like, God love the Baltic Tigers.
I know, right?
Yeah, but so you got to look for the causality, and you search for causality through clarity, Like you can hear all these different variables, and if you try and trade on every variable and everybody's opinion on an individual variable, you're going to go insane, and you're never actually going to produce fruitful results. And sensationalized news increases, doesn't decrease. Reading the news increases the amount of like static you're going to hear, variables that don't match up. And so I would say, like, you have the data, search for the clarity through the data. If you want to apply cause and effect events using your data or just reading the news in general, search for the things that are connected. And that will help you make the decision, because you should make decisions based on causality. And there's no better field. God love my statistics friends. We steal a lot of your stuff, so no insult to you. But there's no better field for the investigation of causality than economics.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Okay, I'm going to see if I can find whatever economic headlines were this weekend, and let's see if maybe we can take a look at one together.
Hope it's something really outlandish.
I know, right? Let's see. That's mortgage rates rise in anticipation of economic news from the National Mortgage Interest. We got consumer sentiment lowest point since last year. You might have just missed earth-shattering economic news from CNN 2 weeks ago.
How about the first one, interest rates, because economic uncertainty. What's the number one thing that dictates mortgage rates?
Probably the Feds.
The Fed. Yes, Kyle. You knew that answer. I would never set up my dear friend on an answer I didn't know he had right off his holster. We're cutting rates. Rates are gonna get cut. Like that's what's happening in 2 months. And somebody's just reporting the exact opposite of what every econ student, every economist knows, which is that what drives down mortgage rates? Very clearly, the federal fund rate is what drives it down.
Mm-hmm.
But that's not a fun title. Do you want to type the title? If you're in that position, do you want to type the title that says, realistically, interest rates are going to slightly decline and slightly help borrowers?
Right.
That's not a fun title.
Right.
Like
anticipation of economic news.
Yeah, also, what does that mean? So, like, are they suggesting that, like, mortgage rates aren't already baking in the concept that there could be worsening economic news? If you already think the economy is going to shit, That's already built into your markets. Are very, very efficient, Kyle. It's like you mentioned earlier. You can't trade on the news if you're just looking at the news on a broadsheet because it's already baked in.
But this looks like why would rates be rising on the anticipation of something from the FOMC too? We're not expecting a hike. We're expecting flat, right? Maybe potential for like a small chance for a cut.
Yeah, because that's not a fun news story.
Yeah.
Just not. And like, I don't know. It's. I think I don't want to say I've made a lot of my public discourse on this. I'm not a contrarian by nature. I don't like contrarians. I think contrarians are intellectually lazy. I think critics are intelligent, but I think contrarians are intellectually lazy.
Yes, I've caught myself doing that before too, where you're just trying to be contrarian just to be contrarian.
Well, in private conversation, Kyle, I think you and I both try to be contrarian just to...
no, I don't. Fuck you.
Jazz each other. I have shared a taco with you, my friend.
That's right. You took me out for a nice dinner. We went for Mexican food.
That was a good place. We going to go back there when you come back up there. I like to...
So good.
Shout out to Cilios and Braintree if anybody's ever up in this neck of the woods. Kyle, can I plug that?
Yes.
It'd be great if you beep that out.
I can, yeah.
I very much like that place.
Well, should we take a because I have a question here from Big Macaroon that kind of talks about, I guess it's interpreting news headlines. So there's a lot of stuff about, well, I guess I'll just read this because Clitter is a Twitter at the news that the DOJ moved some Bitcoin, but the excitement is about Trump promising to stockpile Bitcoin. What the hell does that mean? How does that work?
So this is the first time I heard this question, it was 2016. It was the first time I was on a show called the US Dollar Project, where it was this two economists. They would go around, they interview economists at all different levels in government. All right, so here's my little local government guy get interviewed just after the head economist for Alaska got interviewed. I'm like, damn, I am completely unqualified. Still unqualified, but a little more seasoned.
Yeah.
And I was asked this question on cryptocurrency market baskets. And I was just like, what? And the guy's like, yeah, do you think that would be a cryptocurrency market basket? And I said, no. And then he was like, wow, you said that really confidently. And I go, will there be a blockchain-backed market basket for currency? Yeah, probably. I wouldn't be surprised on that. I'd be a hypocrite. It was part of the first sale of a blockchain-backed bond in the U.S. So if I didn't believe in the technology, I'd definitely be a hypocrite. I 100% believe in the technology. It's incredibly safe. It adds a level of security computing power that can't be replicated. But I thought that was such an interesting question when the economist asked me. So shout out to the person who asked that question. They think like an economist. But what does that mean? Okay, so you want to build a reserve of let's say Bitcoin. All right, they said Bitcoin in the news article. Let's just run with this. Right?
Okay.
So what are you doing? All right. So what is a reserve? What is having a reserve of currency? Well, it means different things to different nations. So if you're in Switzerland, right, your reserve is going to be made up of dollars, euros. Actually, it's also going to be made up of like your own francs, which is kind of cool. I think they can't. Don't quote me on this, but I'm pretty sure Switzerland's one of those nations that carries things like the yen as part of their currency back. But actually, real estate's a huge portion of the central reserve of Switzerland. So Switzerland looks for broad market diversification among interest-bearing and high liquidity assets. So you'll see bonds in there too, right? Okay. So Switzerland really hasn't experienced inflation over the last 5 years, which is wild. Like, their inflation rate is in like the 1% range because their underlying basket that supports their currency is made up of things that appreciate in inflationary environments. So their currency just follows along with it.
Smart.
Yes, very smart.
Why don't we do that?
Because we like having a developing market. We enjoy having the ability to open up a business. God love the Swiss, man. They know what they are. They know what they are, and I love it. Like, they know their economy. Now, what is the purpose of having a reserve? All right. Well, you have a reserve to prop up your currency, to strengthen or weaken your currency as you see fit. Now, that sounds bizarre. Why would you want to weaken your currency? And this comes back to why the whole Donald Trump with Bitcoin, because Donald Trump, in part of his campaign speeches, I'm going to stay real apolitical here, has talked about weakening the dollar. Again, sensationalized headline. weakening the dollar, weakening the dollar, weakening the dollar. Now, you're going to talk to economists like me who don't like a weak dollar. I'm just going to, I always disclose my biases. I want the strongest currency possible. But why would you weaken the dollar?
Imports.
Dude, boom, exactly.
Yep.
Like, if you weaken your currency, it makes American exports more competitive.
Yep. And he wants to bring manufacturing back to the U.S., so part of that would be trying to do whatever you can to drive that demand, right?
Right?
Yeah.
Now, there are no winners there can be losers in government policies, don't get me wrong, but there's only trade-offs in economics. There's there's really no wins and losses. So what does that mean? Well, basically, if you are encouraging exports, you are going to be penalizing another part of the U.S. economy. That's why tariffs don't super work that well. Tariffs don't save jobs; they just move the job cuts to industries that don't deserve them.
Mm-hmm.
They usually magnify them, and they usually magnify the job losses and move to industries that don't deserve it. We're usually strong beforehand. So you need to be able to. The U.S. dollar is very hard to manipulate. All right, it's incredibly hard to manipulate. One, it's the reserve currency of the world. The U.S., to be honest with you, the Fed really doesn't know how many, Treasury, I should say, doesn't know how many physical dollars are out there. There's actually a whole discussion on if they should even know. That's like even the point, because
it seems like that should just be accounting.
Yeah, like how many did you print? Like,
right. Yeah, like, we can start there. That should be a good ballpark.
Like, how many do you think are destroyed?
Yeah, yeah.
And it's because monetary base really doesn't matter for inflationary purposes. It's M1, which is the money that's in banks. And we have a really good idea, like to the penny, of what that is. That's what encourages money velocity. That brings me to a certain term here: money velocity. How fast a dollar moves. And Milton Friedman won his Nobel Prize for this. But one of the challenges to money velocity is that what happens as you approach infinite speed of a single dollar?
Right.
Doesn't that replicate having $1 trillion or $10 trillion or $100 trillion?
Right. It's like the single electron theory, right? There's only one electron that moves back and forth between time, but it's done it so many times that we see it everywhere.
We see them everywhere, exactly.
Yeah.
And so as we enter a more digital world, I don't know, like as we adopt more digital currencies like Bitcoin, do we have the ability to trade at infinitely faster and safer speed? And if you're somebody who wants to devalue currency, and increasing velocity of currency is a way to decrease the value of a currency, did we just create an artificial expansion of monetary base? What if the monetary base is already at that size? What if we're already seeing that impact because money's already moving at this infinite speed? That if you put in Bitcoin, you're not really changing any of that because the U.S. dollar is still dictating it. And this gets into a really fun discussion that you can have in monetary policy and economics, which is, does a reserve matter for the U.S. dollar?
Like, it seems like it's like the vaccination thing, right? So if everybody else gets vaccinated, you don't really technically need one. So if everybody else is using our currency as their reserves, then we don't really need one.
No. There's a great scene in Malcolm in the Middle, and Reese gets his license, and he says, his dad's like, oh, you got to pay for insurance. He goes, why do I pay for insurance? Everybody else has it. His dad, Hal's like, that's a good point. I don't want to say that's U.S. monetary policy, but I'm also saying that's not the furthest thing in the world from U.S. monetary policy. But that's the fun part of this discussion on, like, what if we just had $1 trillion of Bitcoin?
Right.
I don't think it matters.
Really? So, but like, I would have thought, like, we have a strategic reserve of oil, right? And that makes sense, right? If we ever fight a war, we want to make sure we can, run the country for an extended period of time.
Yeah, 90 days.
I always thought that, like, reserves were, like, for that. They were for either, like, I don't know, maybe dampening, like, the cyclical natures of whatever the asset is. Like, you can release some from the strategic reserves if prices get too high. You can buy if it gets too low and keep the floor and ceiling, relatively stable. But to do that with Bitcoin, like, it's, what are you trying to accomplish? What's the point of holding that?
Yeah, first off, God, you think like a trader, man. God, I'd love to be in your head for a day, because I love the way you think about that. When you think of that, sometimes we call it over-the-counter commoditization, like the idea that you are making a transaction. Economics will talk about it, like you are making a transaction across the counter. This is where we may disagree.
Okay,
I don't view currency as that. Currency to me is a medium of trade.
Okay.
there is no value to a dollar or to Bitcoin or to a franc or a euro or a yen or a yuan besides from this where I get a little bit Niall Ferguson here, trust inscribed.
Yeah.
So you moving that dollar, you're 100% right about like natural, like, oil, the National Reserve and stuff like that. 100% right on that. Like that is a straight up trade. Like that goes across the table. That can suppress prices because you increase supply. I don't think increasing the supply of the monetary base, I should do that way because I'm on camera, increase the supply of the monetary base doesn't necessarily drive inflation. You need that money to get into the economy. So I think if you already have, like, I was like, one of the questions, because I have, but especially like what I've done in blockchain with the bond is that like for some reason like crypto bros now think I'm like with them.
Yeah.
So like my Twitter DMs are very awkward, and I don't like talking to these people. But yeah, it's let's be honest. What's the point of somebody holding a Bitcoin? They're not buying stuff with Bitcoin, right?
No, they want it to. They think it's going to appreciate, and they're going to be rich.
And what are they going to do with it? They're going to sell them for what?
Yeah, to get money to go buy something.
To go buy something, dude, right? Like, right? Yeah. So like I'll put it this way: it's like, do you increase? What do you call it? The stabilization of funds. Like, if we had a reserve currency, not reserve currency, we had a reserve for our currency. Does it change whether it's in $1 or $100?
No.
So does it change if it's in $1 or it's something worth $64,000 that people only trade to US dollars? You're just putting different bands on dollars.
Right. I see.
So I don't really
the only thing that I can see is he's just trying to get the crypto people to vote for him because he's going to be pulling, $2 billion worth of Bitcoin off of the pool, which in theory should cause prices to go up if there's, that much liquidity being taken out of the market.
Yeah, you're just 100% right.
I don't see what the benefit is to the U.S.
I don't like my whole thing. Like, I'll be honest with you. Like, I'm not 100% against having a reserve for a currency. I don't know how it would help the U.S. Like, hey, listen, I'm sure I'm going to get an email later, or I'm sure I'm going to tweet it out, or whatever. I'm sure somebody's going to explain. And I don't mean this in a. Yeah, I know I can be kind of tongue in cheek. I literally don't mean this in a bad way. Like, if somebody, from a mechanical standpoint, like, I'm not saying you have to be an economist to explain it to me. Right. I'm saying, like, from an economic standpoint, can explain this to me of having a effectively dollar-denominated currency as your reserve currency for the U.S. dollar. I don't super get that. Like, I'd rather have something not tied. See, it's so hard to have something not tied to the U.S. dollar because, from a causal standpoint, so much of the value of a currency is based on the operations of the government, and governments have debt to finance things. And that debt is dollar denominated. Like 86% of exchanges are U.S. dollars. Kyle, you probably know this, but just in case somebody, like, people don't know this listening, that's out of 200%. So, like, it's dollar on each side. It's currency exchange on each side. So, like, I don't want people thinking that, like, 86% of all exchanges are just in dollars. It's, like, 43%.
Okay. Are they doing that because they're counting each side, like the sum of...
Yes.
Okay.
The amount of times I've been giving a presentation and putting the chart up there.
Well, especially you're going to tell us about like misleading, misunderstanding economic stuff, and then you're going to suddenly throw out, oh yeah, this scale goes to 200, by the way. Just we'll just casually gloss over that.
You're gonna shit on me for this, but I was giving a speech a while ago, and I had a graph up, and I had annotated, like, on the chart, basically saying, like, hey, these are reductionist exchange charts. So basically I was saying, like, hey, just so when you look at this chart, you're going to see US is going to say 43%. All right, but that's because I'm contextualizing this on a bar graph that only does 100%, right?
Yeah,
like, you ever do that, like Excel? Like, there's a bar graph that you can just, like, it will just say 100%.
Yeah.
And so I love live Q&As. Like, they are my favorite thing. And part of it is that, like, I love the uncertainty of it. I just really do. I like it.
Yeah, it's different. It's right. Fun. You get to think on your feet. You get questions you don't normally get asked. And yeah.
So I had a gentleman sitting in the audience who was, he was a person.
Okay.
And he decided that he was going to argue with me. You get one of those. Every if you got a large enough venue, one Q&A, you always kind of end up with that. And so
I've heard of your experiences as that guy in a few of these.
Oh yeah, on both sides I'm an asshole, but
Germany.
Germany. I love Germany.
Yeah.
So the guy says to me, he goes, "I think your chart's wrong." I go, "Why?" He goes, "Well, actually," and I'm like, "Oh god,
I love that. Actually,
that meme." All I could say, he didn't look like the meme. I wish he looked like the meme. He was actually really well dressed, better looking guy than me. And he goes, "It's 86% of trade is in U.S. dollars." And he's going, "You just gave this presentation talking about the strength of the U.S. economy." Blah, blah, blah. And I'm like, I don't. If I'm ever arguing with somebody in that situation, the other person's just going like shaking their head. Well, it just obviously isn't on camera, but like I'm just bobbing my head up and down. I would stop talking. I'd be like, oh, something bad's gonna happen. Like I'm gonna finish what I'm talking. He's just waiting for me.
Yeah.
So I like go back a couple slides and I take the little pointer that's part of the slide control, and I'm like annotated to 100%. And he was like, oh, okay. And he just sat down, and I was like, oh,
that's not much. Okay, I would take that. That's more pleasant than I was expecting.
I was like, oh, okay. I was like, I like this dude. Yeah. He was just like, he was ready to fight. And
then he was wrong, and he's like, yeah, I'm wrong. Okay. Yeah. I can respect that.
I'm sure the next conference he went to, he was like twice as angry.
I'm going to get this motherfucker.
Yeah. So now every time I talk about it, I'm like, all right, I got to remember, like, I want the listeners to know that's when they look at those charts. They're like, okay. Like, well, no, I remember the lanky diabetic yelled at me one time about this. And make sure I remember it's 200%. I'm going to get some kid who shut off early from this podcast is going to send me the nastiest email that he failed like a Econ 330 institutional banking course because he logged off early and thought it was still 100%. Absolutely, I'm gonna.
Kind of getting up close to the end here. Do you want to kind of sum up maybe some of the 3 steps that we talked about there, and any other closing thoughts?
Yeah, so absolutely. I think in the closing thoughts is, there isn't a blueprint to this. There isn't one way that you can always discern things. Part of it is building your tool chest of knowledge. And ironically, one of the best ways to be able to discern the news is staying up to date on the news.
You mean reading it? Oh, man.
There are certainly some good educational like YouTubers and stuff like that I highly recommend. I think Polymatters is great. It is absolutely one of the top ones to kind of
Polymatters.
Yeah.
Okay. I'm gonna link them.
Yeah, absolutely. They're really a top tier. Visual Politique is certainly one. I think they're British. I think they're originally, I think they're originally Spanish, but their British channel, I think, kind of now dictates stuff. Then Visual Economics. Those are 2 channels that talk a lot about international news, international economics. I'm going to say one of these. I've been recommending them for the last year, and it blows people's minds when I recommend it. But it's one of those news channels that I've been listening to for a couple of years now, and their accuracy in reporting is insane. Like, I would never think a firm like this would be that good of it, and it's TLDR. TLDR News, man.
Just waiting for you to say Fox News.
Why did I say that? Damn it, I don't know.
MSNBC.
Rolled right in there. What's
money.
What's the new Fox News One America or something?
Oh God, I don't know.
You have to have like Direct TV, and like it's like channel like 95,000.
Oh my God, no, I have no fucking idea.
Yeah, dude, TLDR News, they are excellent. And if you're looking more into the defense industry, like I know there's a lot of listeners here who like defense industry investment, which I don't blame you. It's prolific and high value. Sandbox News is excellent. A lot of defense. And listen, I listen to the Ryan McBeths. I listen to the Preston Stewarts. I listen to T Supply. I listen to the dudes reporting on actual like what's going on the ground. Not that Sandbox News doesn't. But if you're looking for like defense industry contracts or like who's going to be the next guy to win something, they have routinely shortlisted firms that are going to win OTAs or full out defense contracts for billions of dollars.
Oh no shit!
They end up winning. The guy who runs it, he's a retired Marine. He's just brilliant, and he does
Sandbox News.
Yeah, I think they have 2 X's in it.
Okay, nice.
Kyle, with your background, you'd love the guy because
I'm gonna check these guys out.
Disturbingly pragmatic.
Yeah,
like the most pragmatic human. He should be president solely because he's just pragmatic. Like You're just having a good decision.
What's his name? We'll write him in.
Yeah,
I don't think they'll take Sandbox News.
I actually want to look him up. I follow him. I still feel there we go. Feels weird not to type Twitter in. I've been on Twitter in so long.
Oh, we still call it Twitter. Although now we call it Clitter because
I
fucked up in an episode and called it something wrong.
Oh my god, that's funny. Every time I'm on Twitter, it's just Elon Musk, which like it's his network, so I can't.
I know. It's like he bought it.
Dude, I want to be that. I like that level of rich is just hilarious to me.
No. Buy Twitter for the memes.
Alex Hollings is if anybody wants to follow him on Twitter, dude, he is awesome.
Alex what?
Alex Hollings, Hollings.
Yes. Okay.
Honestly, he's a good reporter. He actually reminds me a lot of you, Kyle. Like he's that type of reporter who doesn't get like overly excited about the news they're reporting, but it's like super detail oriented.
It's like he talks about it because he has to, not because he likes it. No, I'm just kidding.
Kyle, I'm right. You and Kyle, that's what I'm doing. That's what I'm doing. But yeah, I mean, it's back to the original thought. It's that discernment of news. The best way to be educated on news is to read all the news you can. But in terms of those other toolboxes, I know we talked about like the big three that I mentioned, but I really want to consolidate them down into really one point, and that is the search for causality, whether it's your data, whether it's your qualitative approach, reading on different news sources, following different stories, following different companies individually, knowing what you're investing versus having what you're invested in, dictating what you're investing in just by, the momentum of news, is that it's look for the things that create causality, things that relate to other things. Real numbers affect real numbers. Real variables affect real variables. The news is just going to distort that. For better or worse, that's what it's going to do. And relying on data, but not just only relying on data. I don't want to come off here and say, ignore all the news I hear around you. News can still be very valuable in helping you build a portfolio and a strategy based on things you're hearing, things you're seeing. In an unbiased, as unbiased as you can get them, as straight factual as you get them. But that can help the narrative of your data analysis. Data analysis is a very powerful tool, even in a vacuum. But data analysis, when contextualized to the larger narrative that are markets are news too, is really an unstoppable tool. And if we use economics for what economics is, which is applying rationality to the irrational, applying order to the disorder, that is the goal of economics, the goal of statistics. If we take these tools that we've talked about today, the tools we've talked about throughout the mini-series, as much as we joke around, as much as we enjoy, having a very lighthearted conversation on serious issues, what I've hoped throughout this mini-series, and Kyle, thank you again for giving me, a platform that you and I can have this kind of fun discussion, and I'm sure we'll have more fun discussions in the future.
Oh, yeah.
Is that there's one dominant theme, which is that the fundamentals of economics will give you a strong foundation, both in trading and in critical thought. And whether it's tools like data analysis, whether it's tools like, applying skepticism to everything you hear, or, the different larger theories we've talked about that traders can use, from labor policy to monetary policy to, even some of the real basic fiscal policy stuff we talked about that, Kyle, you know better than me and that your listeners know better than me. But if we combine that all into...
I don't know about that.
Oh, you do. If we combine that onto one thing, that one package, which is economics, which is taking a step back and adding in that tool that is economic analysis, that it's not just some hoity-toity thing that people in academia use or hedge funds with too much money use to burn, that every trader, every individual engaged in this not only can use it, but should use it. So yeah, I think that's the goal that I hope we delivered over this time period.
And it was a long and windy road, and I hope you enjoyed the way through it, but I know I did. And I think we're still going to do one more episode, right? We got to do a Q&A. Yeah. I'm going to get white boy Rick in here to join in on that, because, if you're going to get someone to help answer or ask your economic questions, you want the Rickest of the Ricks. Sorry, Dan Harmon.
The original Rick? Is Dan Harmon still allowed to do television?
Dan Harmon's alive, right? No, it's the other one who got canceled.
Oh, that's right.
Justin Roiland.
Oh, it is. Yeah, it is. That makes me feel like Dan Harmon.
I know, I do too.
Yeah, no, I think it should be. I know I'm going to get a lot of questions because classes are starting in like 3 weeks for...
so maybe we do want to let this... maybe we want to give this a couple weeks then before we hit it.
Yeah,
then.
I'll get a This time of year, my inbox is just comedy. I didn't have a Twitter this time last year because I was never a Twitter guy. And we did Boston Blockchain Week, and they were like, "Hey, can you set up a Twitter account?" I said, "Yeah, sure." And some of the DMs are just funny. Like you get from like, but very clearly, like high school college students who are like, "Yo."
I love it when they leave the question number on there.
I
have a question for you. 10A.
As somebody who teaches college
Really?
courses, that just literally makes. I'm waiting for the day that one of my students, because it's remote and some of them don't see me,
comes to you for answers to your. Oh God, that'd be hilarious. Oh, you gotta record that one when it happens.
Would love that. That would make my day.
That would make my day too. All right, I think that's probably going to do it for this episode, though. As always, got to say thank you to everyone who stuck around to the end. Special thank you to Eric Mason here for neglecting his civic duties to come wrinkle my smooth brain tonight.
You got a smooth brain. Come on.
That was just for you. Check out the informaleconomist.com if you want to see more of Eric's work. And if you have questions about what was covered today, you can email us or DM us. We'll make sure to answer them in the next installment. We'll be back soon with another exciting episode, hopefully less controversial than a family dinner photo. But until then, like, share, subscribe, all the things, and have a great day. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.